My screen. This is our Wednesday morning open house session. My name is Eric Senft. I'm going to be your host for the next hour and a half or so. And for those of you who are new to our trading room, welcome. What you're looking at here is the diversified trading system. And we call it diversified because we're actually looking at the market from three different points of view. We have three different tools. One tool here in the top left, this is our Hawk Scalper. Top right is Falcon Swing Trader. Bottom left is the Eagle Trend Trader. And the bottom right is the latest addition to the DTS family. This is the Raptor, and the Raptor it incorporates elements of the other three birds all into one screen. Now, the charts you're looking at here are all for the NASDAQ market. I'm also watching soybeans and crude oil, but I would be happy to take a look at any market which is of interest to you. Now, before I get too far into this, can I please get an audio and video check from someone? Just let me know that you can see things all right, that everything is coming through. Great. Thank you very much. Jay is asking to see crude oil. Okay, well, while we let the fur fly here out of the open, we'll go take a look at crude oil. We actually just had a first micro macro cross signal right here and a trend change signal, but I'll get back to those. Today, of course, crude inventory report. And well, let's take a look here at crude first on the Hawk Scalper. And you can see that crude very sideways right through the London Open. It opened right here. Yesterday, crude was a little bit bearish. We did manage to pick up a little bit of this downward move on crude. And then they started going sideways. And I suspect that they're going to keep going sideways probably until the inventory release at 7:30 Pacific, 10:30 Eastern. You can tell here on the Hawk when the market is in chop mode because you're getting all these yellow bar clusters, right? And they're just kind of moving sideways, and you end up with something that looks like a lot of traders refer to this type of range as barbed wire, and you can see why. But it looks like we have a well-defined range here in crude. So if it continues to stay within that range, this could be a nice range to bracket going into the inventory report. But at the moment, no signal on the scalper. Let's take a look here at the Falcon Swing Trader, which is going to show us the same thing but different. Okay, so as far as scalping goes, we don't really have a scalp type trend developing yet. Couple attempts at a trend change signal which have failed. We now have a trend change signal to the downside, so our trend line keeps changing color. We want to be trading the same direction as our trend line. So right now our trend line is red. We have the movement here, this push that moved the trend line from green to red. Now we're going to look for the buyers to rally it a little bit, and that should give us an opportunity to sell it if it confirms the signal. And then here is crude on the Eagle Trend Trader. Oh, and we had a with trend signal right here. You're going to notice that all the signals develop the same way, regardless of the tool. First we print a warning dot, and then when the signal parameters are met, we get a triangle and a hash mark telling us that we have a complete trade and it's time for us to make a trading decision. So even though the Hawk and the Scalper, or pardon me, the Hawk and the Falcon weren't printing signals yet, you can see that the Trend Trader did pick it up. Oh, and here the Trade Forecaster. This is an add-on tool, by the way. The Trade Forecaster is predicting a trend for the next 2 hours. Wow. All right, well, we'll see if that develops. Oh, by the way, these add-on tools, if you would like more information about those or pricing or anything of that nature, you can follow that link. All right, well, that first micro macro cross signal had huge follow through. This is going to be a rather substantial gap lower from where the market left off. So let's see, they stopped trading at where did they stop? Yeah, the bottom fell out of the market just before yesterday's close, or just after the close. So they actually finished way up here. Yesterday's close was somewhere around 46.70. And here we are opening near 46 even. So that is a huge opening gap for this market. Our first micro macro cross here on the Hawk, very reliable signal. Hopefully somebody was able to take advantage of that while I was snooping around at crude oil. The first micro macro cross signal, very easy to identify. It happens when the micro line, that's this thin one, crosses the macro line and everything comes into sync. So we have green bars, green trend lines, green filter, and you can see we printed the warning dot, the triangle, and the hash mark, and here the market never looked back. I probably would have ended up covering the trade something like that. Easy scalp, and even better follow through if you had a runner in on that play. Might be worth setting up the trade manager here for a runner today. So instead of going all in, all out on target, I'm going to change my first target from 100% to 50%. So you see that's changed my parameters. I have half on target and a half runner. Oh, I forgot to take a look at crude oil on the Raptor. Hold on one second, I'll get that done for you. All right, so here's the Falcon. Here's our trend change signal that I was talking about before on crude oil. But here's the trend change signal. So the trend line goes from red to green. We get the sellers trying to fight the market back, and then we come back with a buy signal. See, warning dot, triangle, hash mark. So this is one of the buy signals that we look for. Could I cover it there? Yes, I could. And here too, an easy hit and run type trade. Nice little swing. Hits our high probability target, no problem. So, wow, the NQ very active this morning. My day could be done. All right, so here's crude oil on the Raptor. As I mentioned, the Raptor is a tool that incorporates elements of the other three birds all into one. The principle remains the same. We're looking for warning dots, triangles, hash marks. Essentially, for most trades, we're looking for things to come into sync. It looks like crude oil actually gave us a double pullback signal. Didn't get quite as deep into the hard edge as I normally like to see, but it was still a double pullback. Came out, generated a sell signal. Looks like it did have some follow through, but we'll see. On a breakout like this, it's not uncommon to see the market retest, and that if the sellers are serious about holding the market down, we should get another opportunity to short somewhere on this leg right here. This tool that you see right here, this is one of the latest tools from Indicator Warehouse. This is called the Geiger counter. And the Geiger counter is essentially a tape reader. It allows you to see the time and sales visually. So you can see where the buyers are, where the sellers are. Currently, the needle is white, suggesting that there's no real bullish or bearish bias. A good tool for not only helping you gauge whether it's worthwhile to get into a trade, but also whether it's worthwhile to stay in a trade. Like let's say we were short here. Currently the Geiger counter you can see getting a little bit more bearish. This little red envelope that we see around the bar, this is also part of the Geiger counter. This is a trade indicator. So right now it's telling us short-term bias is bullish, or pardon me, bearish. So if we were currently short this trade, we might still want to stay short, maybe relax our stop a little bit. But yeah, very helpful tool. Look at the sellers pour it on now. Lots of selling. So we'll see whether that follows through with the sellers moving the market lower. Of course, if it continues to struggle, then that's probably an indication that there's a whole lot of buying down there, and it might be time to get that stop in a little bit tighter. Oh, thanks, Jim. Jim always gives me the advanced decline numbers. So right now, the advanced decline in negative territory. Yesterday was a little bit more bullish. Today we're currently about negative 600, give or take. We got about 900 or just shy of 1,000 buyers and 1,600 sellers. And, you know, it's odd because normally you see those types of numbers, you see the market tail off and head lower. But, wow, the last couple of days, the market has been making some pretty strong rallies on some pretty weak numbers, which makes you think that the market is running higher on fumes. All right, so after that initial run up, they've kind of put the brakes on things. Josh is asking, Eric, can you show the Geiger counter parameter? Does it only work with the Raptor? No, it works on any of the instruments. In fact, this is a standalone tool. You can put this on any chart. It doesn't even need to be a DTS chart. What I do is I tend to put one tool per chart so things don't get too confusing. Now we're actually working on a Raptor sell signal here. What we've got is we've got a little bit of a failure going on. I might, oh man, do I want to sell into such a strong market? Ay, 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 ay. All right. So the Raptor, we handle our entries a little bit different. Now this is tricky because we're trading into the hard edge here. And I'm going to set my stops above the high. In fact, what I should do is, well, I was going to say maybe I'll just take a onesie on it. The initial buying has evaporated though. It was like everybody who sold yesterday has walked away. So the Raptor is just one of the tools, one of the add-on tools. Another add-on tool, uh, which is very popular, is the support and resistance suite. Now, once again, you can use this on any chart. I just happen to have it on my Falcon so that things don't get too confusing. But you can see there's an assortment here of 21 support and resistance lines. No, these are not Fibonacci levels. No, these are not pivot points. The center line here is the median line. It just essentially tells us that there's 10 lines above and below. It is an important support and resistance area in its own right. And then above it and below it is the primary resistance and primary support. These tend to be the two strongest or the three strongest lines on the chart. If the market gets beyond here, the primary resistance, it's going to start moving into secondary resistance. And if it breaks above here, it's probably going to move two zones. So we could probably expect it to move up here to 46.65. We've actually generated an early trend change signal here on the Falcon. I'll wait for the complete trend change signal before I get too anxious about shorting it. You see, the problem is here on our Eagle, you see this hard edge on our band? Well, we've got that same hard edge here on our Raptor. And the band is a carryover from the Eagle. And we tend to see some sort of reaction when the market encounters that hard edge. Oh, the advanced decline getting a little bit stronger, Jim says. So I've got my auto break even trigger in play. And you can see the trade manager automatically rolling my stops. That's these blue dots that you see here. We have 16 different stop strategies to choose from, and each one is fully customizable. So let's say, while I'm in this trade, let's say I want to become more aggressive with my stop and I want to go, say, with parabolics. So I can turn the preview on. I can see where parabolics are at. If those look good to me, then all I need to do is click accept. And now the trade trailblazer will manage the trade for me according to the parabolics. Now you'll notice it just went from up here, my stop, to down here. That's because we hit the break-even trigger. We might be a little bit early on that, but we'll leave it alone all the same. Come on, just head a little bit lower. Speaking of heading lower, let's take a look here at soybeans. Soybeans working on a macro pullback signal. This is another one of our high probability signals. The macro pullback signal, again, very easy to identify because everything stays in sync except the micro line. So it might be a little bit difficult for you to see at this moment because it's just changing, but the micro line is turning green. But everything else remains red. We're getting red warning dots, red bars, red filter. So we don't have the complete signal just yet, but it is looking as though we are going to get a sell signal. Maybe. We'll keep an eye on that. Oh, did they rally just a little bit too much? Yes, they did. So the Raptor came up just short of my profit objective. coming back with yet another raptor signal. And we also had a first micro-macro cross. I better get on these hawk signals because they're getting some decent follow-through. I'm going to show you something here on the raptor, which you don't get on the other tools, namely that the raptor is a one-click entry system. You see how all I had to do is hit the sell market button there, and all of a sudden I've got my first contract with a 20-tick target. I have my second contract with a 0-tick target, and I'm managing everything according to my parabolic strategy. I think I'm going to loosen that up a little bit though, and maybe go with the ATR. Maybe dial that back just a little bit. Give ourselves a little bit of wiggle room on that. Now the Trailblazer, what the principal difference between the Trailblazer, actually maybe I should give it a little bit more. There we go. Oh, no, the swing is a little bit closer than I thought. The principal difference between the Trailblazer and the Trade Manager is that there's no risk component down here. You're going to notice here on, let's say, the Hawk, that we have this whole risk component down here. And what this does is it helps you avoid risking more than you can afford to lose. So here we're getting a green bar sell signal. I've currently got my risk set at 2%. Now notice the difference here is that I need to set at least my profit target and my stop loss, and then I need to hit the submit order for the order to become active. Whereas with the Trailblazer, all I needed to do is hit my buy or sell buttons. See, if I hit my sell button, for instance, there's no order here, but I'm just showing you. If I hit my sell button, automatically I get my buy and sell orders and my stop loss. Now you see the programming, this is technically my stop loss here, but the programming recognizes that the stop loss is in the wrong direction for my trade. So it actually gives me a default stop loss. Pretty cool, huh? Okay, we'll close that out. That wasn't a signal there. So we'll just close that out for the moment. Very wishy-washy type market at the moment. Wow, those darn buyers. Not giving it up. Wow. The green bar sell, our signal that just closed out here, not the strongest of our signals. If you're looking for high probability trades, let me get you the cheat sheet, because this is something that people often ask about when they're first trading DTS. They say, well, you've got all those arrows. Which ones do you take? Well, we tend to concentrate on these higher probability setups. So this is your Hawk scalper, and you would be looking for things like the first micro-macro cross, or the macro pullback, or a 4-arrow consolidation, or a post 4-arrow consolidation signal, or at the very end of the trend, we tend to get red bar buys or green bar sells. Oh, definitely. Josh says, can you share this document? Absolutely. Here, just shoot me an email if you don't have it yet, and I'll send you my email address. There you go. All right, let's see if we can find a decent trade now that you've seen pretty much all the features. Oh, the last two add-on tools, I might as well go over those. We have here the Trade Forecaster. The Trade Forecaster tries to tell you what the current environment is and what the next one is likely to be. And you can see that right now. And this is also an add-on. It will work on any chart, not just a DTS chart. So currently we have swing mode, and it looks like we're going to be moving into trend mode in about 20 minutes time. And then the last tool that we have is here, the Day Ranger. And the Day Ranger, what it does is it shows you the today's range compared to the average daily range. So you get an idea whether the market is expanding or contracting. And it also, useful for using stop loss and profit targets. So you can see here the average daily range somewhere around 200 ticks. So you could say, well, I want to offer up 10% as a stop loss or 20% as a profit target. Well, you can use those figures right there. The chart style that you see, these are called the mean Renko bars. And they were specifically developed for DTS. The nice thing about the mean Renko bars is that it makes it very plain to see the price action. You can very plainly see where the buyers and sellers are at, who is controlling the market. Oh, darn. Crude oil spoiled our possible sell. I was watching crude oil here. Notice we've got that retest going on. We were working on a macro pullback signal. See, we had the red bar, the warning dot, the green trend line. It was setting up for a possible sell, but now it's drifted into yellow bars. Although this could be a three arrow consolidation signal. The three arrow consolidation on crude oil, it's three arrows. On the other markets, it's four. That's because crude oil is usually a little bit more active. A three or four arrow consolidation is the only signal I'll take off of yellow bars. So let's see. If I shorted there, because I know the signal's going to print there if it heads lower, can I cover it above there? Oh yeah, I can. Oh, that's not such a bad looking trade. We'll just park that and let that sit for a moment. We actually don't have a tradable signal just yet. Alrighty. So another big run up. Lots of overflow volume, I think. All right, well, here comes that three arrow consolidation. Now, this is And I'm basing it on the retest here, looking for the sellers to take the market back. We're still a little bit early. And with crude oil, I tend to double my profit objectives just because, once again, crude oil is a little bit more active. Come on, get down there. Come on, crude. Trying to give it a little bit of elbow room here in case it needs it. But what happened to all the sellers? There were a whole lot of sellers took to force the market below this low. The market comes back. Now we see the sellers step in again. If they're serious, they need to show me some follow through here. All right, so we've hit our break-even trigger. Oh, get down there. And we're gonna pull it down with the mouse. This is a little known trick about trading. You can actually pull the bar lower. But you gotta do it right. There you go. See? Come on. There we go. All right. So 3-arrow consolidation signal, one of our high probability signals. Our highest probability signals are the first micro macro cross. This is on our Hawk scalper that I'm referring to. Our first micro macro cross and our macro pullbacks. Oh, have we not had a macro pullback? Oh, right here, a macro pullback. So nice example here also of, so we have a first micro macro cross right here. Again, pretty easy to identify. Micro line, macro line crossover. Everything comes into sync. A signal prints, away you go. Macro pullback signal. Everything stays in sync except the micro line. You print the signal, away you go. Don't really know what happened here. This is a rather unusual bar for the mean Renko bars. It might have been a gap. All right, so crude a little bit quiet after that attempt. The advanced decline worked itself back to nearly an even draw. Jim says we've got 1,300 buyers, 1,100 sellers, so we've actually moved into slightly positive territory. I've been waiting on soybeans to give me something saleable, but not yet. Okay, here's crude oil once again. Now this is crude oil on the Eagle. This is our trend trader, and you can see we were in trend mode forecast for about 2 hours. Now we've got about 90 minutes left on the clock. the trend a little bit slow so far. Now, you should know that with the trade forecaster, just because it says trend mode doesn't mean the market's going to go boom like that. What it does mean is that for the most part, the progression will be smooth, the pullbacks will be minimal, so that allows you to be maybe a little bit more aggressive with your stops, maybe run a wider profit target, and vice versa. If it's full on scalp mode, well, then you're going to need to do the opposite. You're going to need to be perhaps run a wider stop because the market's going to chop around a lot, maybe take profit all in, all out because, well, it's scalping, right? You don't know where the market's going to hold up. So we're working on a trend change signal. You can see we've got the warning dot, we've got the triangle, so we're waiting on the hash mark to print. This squiggly red and blue line that you see on here, this is the ATR. This is something I've adopted from Mike Filigera. He's a fellow who uses DTS to trade the stock market. Oh, and in case you didn't know, you can use the DTS system to trade any chart you want. Whether it's Forex or futures or stocks or ETFs. Whatever you can plot, you can get a signal from DTS. So, you see our sell signal, the parameters have changed. So the warning dot and triangle, they're just kind of hovering right there, depending on which way the market's going to tick from here. So if it trades lower, we're going to turn this ATR line over, and then everything will be in sync, and I'll take a look at shorting crude oil. Otherwise, we're going to be on hold there for a little bit. So a little bit of a larger range here this morning. You know how I was telling you the mean Renko bars show you the price action? Well, this sell that we took here earlier, this was a failure or a soft edge sell, but it was based on what we call the test of the extreme. Right, so here's the high price, the market comes down, makes a lower swing, we print a sell signal. So that's what I'm waiting for here. This is either going to develop into a double pullback, and then the market's going to come out and give us a buy, or it's going to develop into a test of the extreme and a failure, and we're going to get another sell, very similar to what we saw here. I should probably shoot a trend line across these lows. It might be easier to do on the eagle, actually. Depending where you're going to draw your trend line from, we're getting this type of scenario where it's starting to wedge up a little bit and maybe even give us a trend line overshoot. Why is that significant? Well, believe it or not, if this is in fact a trend line overshoot, that's a bearish sign. I know you would think it would be bullish, but it's not. It's actually bearish. So I'm not quite sure about the top end of that trading range just yet. See, even if I draw it this way, if I draw a parallel line, notice how we're starting to shallow out. We're coming up short. That's the same idea as an overshoot. It's actually a fairly bearish looking sign. Sure, Jim. Jim's asking if I can change a color here for him. Sure. Oops. There we go. Oh, the Raptor always takes a little bit longer to load. Okay, working on a possible trend change signal here in our Falcon. Notice our trend line has changed from green to red. This is the down portion. Here's the up portion. We need to see a down portion and a signal for it to actually become a sell signal. This is dicey to say the least because the market has been so strong to the upside. All right, well, we've printed a buy signal. We did have a triple or a quadruple dot, but really nothing that I would have risked money on. All right, here we go. So we're getting our warning dot. We also get an audio alert along with our warning dots. I know, I'm terribly stubborn about shorting the NQ. I've been looking for it to head lower for a while now. We really shouldn't have names up here for the markets. The markets should just be X'd out. Then we would be less inclined to impose our own attitudes on the market. Okay, so we're getting a warning here in the hawk. No signal yet. Wow, are they really going to come out of there with another buy signal? Ay, ay, ay. All right, well, we can clear this signal up. Still floundering a little. Yeah, Josh, you got it. Josh says the NASDAQ Falcon is going to test the extreme to the long side. You are absolutely correct. So there's our extreme price, comes down, and now we're testing. Very important point that we're at right now. If it fails from here, then we're going to see the sellers try to drive the market down. And they'll probably bring it to the trend line, or maybe just a little bit below. There'll be some sort of reaction. And then if the sellers maintain control, then this is going to be a great selling opportunity somewhere through here. And if it just keeps flip-flopping around, it also offers us the opportunity to bracket the range. Just, identify it as a trading range and throw in a buy and sell order above and below. Nothing wrong with that. And that seems to be where they're at right now. Big run up, lots of early momentum. The advanced decline almost dead even. Now we're printing a first micro macro cross buy signal. So you can see everything is in sync now. We have our micro macro lines cross. This is actually a buy signal. Let's see, can I afford that? If I take it above the high, cover below there. Before I forget, Adam wanted me to mention that there is a special coming on the support and resistance suite. These support and resistance lines, you can see, are doing a pretty fine job of supporting the market at the moment. You can find out more about that special. He's making it available to people in the room. And what you want to do is go to the Indicator Warehouse site and click on Day Trading Newsletter. And I don't know if he has the information up there yet, but if he doesn't have it up there right now, he will have it up there shortly. Oops. Let's get that back here. There we go. So you know how I said the DTS system will work on ETFs also? Well, here's the SPY for those of you who are following the ETFs. The SPY, of course, the same thing as the S&P 500, except a more affordable version. And you can see here too, we've got our trend change signal. Here's our trend line changing color, our up, our down, our up. Here's our signal. Took a little bit of heat, but the market went higher from there. I should bring up the crude oil market again because we're going to be getting into inventory pretty quick. All right, we've got a few minutes until crude inventory is released, and sometimes what I'll do, if we have a well-defined range, here we go. If we have a well-defined range, I'll use the OCO order, one cancels other, and I'll bracket the range. So I'll throw in a sell order below the bottom of the range and a buy order above the top of the range, especially if the market is trading somewhere within the middle of this range. So we're effectively bracketing our primary resistance and primary support lines because that seems to be where we're getting the reaction at the moment. And about 5 minutes, 4 or 5 minutes before that inventory report is released, all right, Jim says he doesn't see anything under the newsletter link just yet. Oh, you know what? I think what Adam is going to do is email you directly. So if you're not already on the mailing list where it says stay connected, if you enter your email address there, he will email you the special directly. All right, we'll just keep an eye on crude for a little bit. 1, 2, 3. Soybeans starting to look a little bit stronger. Initially, we were thinking that there might be a sell-off in soybeans, but they actually pulled off a little bit of a reversal here. See, once again, that first micro-macro cross signal. Great little follow through on that scalp. So here's soybeans, just the two first micro-macro cross signals would have been enough to make my day. The one lower, the one higher. Oh, although this one came in the wee hours of the morning, I don't think I would have been able to take advantage of that one. But certainly this one right here was very promising. So just looking for our next opportunity, this signal right here doesn't coincide with any of our high probability signals. So I'm going to end up waiting for like a macro pullback or perhaps a 4-arrow consolidation. That would be on the hawk. That doesn't mean I'm not going to get a signal maybe on the eagle. Which is actually working on a green bar sell. So as far as the eagle is concerned, it's not quite ready to give up the ship yet. Oh, great question from Bo. Okay, we're going to leave the NASDAQ alone for a moment. We're going to watch the crude inventory report unfold in the next couple of minutes. Now, warning folks, this is a very, very volatile market. And as a trading room moderator, I'm allowed certain luxuries of showing you things that may or may not be prudent for you to do depending on the size of your account. If you're a well-funded trader, then by all means, this is an acceptable strategy. If you're a smaller trader, then I would suggest you stick to the basic signals. You can watch this for the fun of it because very often it's very exciting. The market moves very quickly. Or you can incorporate a strategy that a friend of mine likes to do, namely, he lets the report hit the floor, let all that early volatility wash out, and then he will enter a trade. Now you'll notice at the moment I don't have an active stop. Well, I'll keep my stop handy. Oh, I know what I was going to do. I was going to make it a very, very wide stop, at least initially. All right, we'll go with that. Always want to have a stop in play. Always, always. Okay, so Bo was asking, how do crude inventory reports affect the price of crude? And this will be true for any report that comes out, whether it be the FOMC meetings or the World Agricultural Supply and Demand estimates, any of the major reports that tend to influence the markets. Crude report comes out weekly, and believe it or not, the actual numbers of the report mean very little. So, however many millions of barrels of crude oil are in inventory will mean very little to which way the market is actually going to go. So you can see the inventory report hit the floor there. We had that very volatile move to the upside. They didn't slip us all that much, but they're not very nice on our fill right now. You can see they reversed rather sharply and are now looking to back up on us. So there's the real danger with the inventory report. Now we'll let the market wash out some of that early stuff, and then we'll take a look at perhaps doing this again once we have this early range settle. Come on, give me a higher bar there. So I know the top end of the range is here. I guess the bottom end of the range is still right here. So this is the way my friend does it. He'll let that early report stuff hit the floor, and then he'll look at the range and he'll bracket that. Now, what I was saying was the numbers themselves are irrelevant. What matters is how the market perceives those numbers. And the perception is always based, you see, the market coming in, and I'm really butchering this explanation. Usually I can do this a little bit better. But the market was anticipating crude oil prices to head lower, right? They headed lower all day yesterday, or for the better part of the day yesterday. And then this morning they kind of went sideways. So for the most part, the market still expects crude oil prices to head lower. If the report confirms what the market is thinking. Now notice I didn't say if the report releases X number of barrels, but if the report confirms what the market is thinking, prices will head lower. If the report does not confirm what the market is thinking, prices will head higher. So it's all a matter of perception. If the market is expecting the report to be, let's say, I don't know, 100 million barrels, and it comes up that it's 50 million barrels, well, 50 million barrels might on the surface still be a huge inventory, but it's not as big as what the market was expecting. Therefore, prices will rally. And vice versa, if the market is expecting a report that says 100 million barrels and it's 200 million barrels, well, the market will fall. It's all based on what the market is expecting. So that's why I don't pay a whole lot of attention to the reports themselves, because it's all based on, is the market expecting a bullish report or is it expecting a bearish report? I hope that makes sense. Like I said, I kind of pooched that explanation. So we're working on a possible trend change signal actually now to the downside. I'll cancel the OCO. And so we've got the down, here's the up, here's the down, here's the signal. Now they're still fighting the signal. Yeah, Bo's got the number there. 2.468 million barrels of crude. Well, right now, it bounced up a little bit, so that would have seemed like the number was light. And then all of a sudden they reversed on that and they said, oh no, it's come back down. And now they're going sideways again. So the inventory may have been more or less exactly what they were expecting it to be. These numbers are rarely a huge surprise. Occasionally, yes. Occasionally you'll see the inventory report come out and everybody says, oh crap. And the market will move sharply higher or lower. But a lot of times it's really not that much of a surprise to people, to the traders. All right, we'll put that away for now. Working on a macro pullback signal now here on our crude hawk. This is our scalper. And you can see the trend line has changed to green. We're still retesting this whole area here, even though the market after the inventory report, really chopped it up. So we've got these yellow bar clusters that tell us the market is sideways. Then we get a first micro macro cross lower. Now we're working on a macro pullback signal. Oh, and now we're into yellow bars again. So that avoids that signal. Bo is asking, is there any other means I can know in advance what the market is expecting apart from the published forecast by Forex Factory? Well, I tend to go to the source for that kind of information. If you go to the US government's energy information website, that's EIA.gov. In fact, here, let me do a little, I'll put it in the window for you. And they will have, well, here, why don't I just do it for you? They'll have weekly supply estimates. So if following the fundamentals is your thing, and there you go. There's all the information you would want about crude oil and then some. Okay, it looks like the NASDAQ finally coming around to my way of thinking. It's been pretty quiet. Well, I shouldn't say quiet. There's been activity, but it's been a little bit spread out. There's the run up, a little bit of floundering, a run up, a little bit more floundering, and now we get a move lower. So we've got our trend change, looking for the trend change signal to develop now, just to confirm that it in fact does want to move lower. Josh is asking, which data feed am I using? I'm using Kinetic. Why, are my numbers off? It has happened. So we've had a breach lower. We should expect a little bit of a rally here and another failure. That will give us our proper test of the extreme. Right? So we're looking for prices to come up a little bit, perhaps fail, and then that will give us a good opportunity to sell. I'm hearing a couple scalp signals. Let's see if it's anything tradable. No, not yet. Okay, so Josh says his logic counter is displaying a different number. Let's take a look here at the logic counter. So I'm not sure there's actually anything to adjust on this one. And he says he's also printing a different high than what I am. So it looks like my high is 46.3650. My Raptor cloud is different because Ricardo's convinced me to go with the faster setting because he was having very good results with the 8-tick cloud. So I've adjusted my Raptor cloud from the default 12 ticks to the faster 8 ticks. Okay, it might take us a little while. We're probably going to get a 4-arrow consolidation building here on the Hawk. Working on a trend change signal here with the Falcon, but I would suspect that it too is going to head a little bit higher. All right, here they are. Oh, I'm a little bit slow on the Falcon, but we do have an opportunity here with the Raptor. Let's see, where's my stops going to be at? Okay, we'll enable those. So this was our trend change signal here on our Falcon. A little bit stretched out. I normally like to see that trend change signal develop a little bit earlier. In fact, it looks like it was trying to develop somewhere around here. We were trying to get some buying momentum going off of the primary resistance. It didn't materialize. The market collapsed. So here's the down, here's the up, here comes the down. And now we're looking for the sellers to have a little bit of follow through on that. And let's see, what else do we have going on here today? Here's crude oil once again, still kind of sideways. This is crude oil now on our eagle. Nice green bar sell. It always amazes me how, well, I shouldn't say impresses. It always impresses me how the DTS will pick up the signal, report or no report. So here, just prior to the report, we were printing a green bar sell, which tends to be a high probability signal for the eagle. And did we hit our profit target yet? Yes, we did. Just hit our high probability profit target, and now we're seeing a little bit of a reaction there. Things slowing a little bit from the earlier activity. This is soybeans now. Soybeans on the Falcon swing trader. And you can see we had a trend change signal to the upside, and now everything is slowed somewhat. We're working on a possible trend change signal to the downside. So here's the portion that moved the market lower. Here's our down. We need to see an up and then a possible down. Okay, we're still floundering with support here, and you can see that the Geiger counter is getting a little bit more aggressive. So what I'm going to do is, if we can get this bar to finish lower, I'm going to go with the bar high-low strategy, which is our most aggressive stop strategy. And I'll essentially press the sellers. All right, there we go. So it's do or die time, where we've got buying support down here, selling support up here. Now we'll get to see who's stronger, the buyers or the sellers. So sellers put in a good effort here. We'll see whether or not they can force the market again. Buyers obvious at this level here. That's why the Geiger counter is green. Just depends whether there's going to be a lot of buyers. Well, I did choose to go with the more aggressive stop strategy, so it minimized my risk exposure. I will make a note in my journal. Had I stayed with the ATR, would that have fared better or not? Things got a little quiet here all of a sudden, didn't they? Well, we'll stay with the market for a little bit longer. If you have any questions or if there's any market that you would like me to post, please let me know. I think my gut tells me that all this buying effort is by the weak hands, by the small specs. I can't help but think that after a monster rally, here's an NQ daily chart. I can't help but think that after a monster rally like this, there's got to be a little bit of profit taking, at least to even retest the 45.50 area, if nothing else. But they do keep pressing higher, don't they? Crude oil making a nice little press higher. Bring that over for you in a second. Okay, so here's crude oil on the hawk. Again, there's that first micro-macro cross signal. And very good follow through on that. So it looks like the initial breakout on that crude oil trade. Now this is well beyond my ability to cover this market, but we were looking at the initial ranges being somewhere here and down here. Market comes up, inventory report engages the upside. I could only hang on to right about here, then the market stopped me out, heads lower. But if you had the means to cover below that bottom end of the trading range, which is, ooh, actually got violated. Crude oil is a mean market. I was going to say you'd be able to actually hold yourself in long enough to realize a profit, but maybe not. Yeah, crude is mean. So everything's turned over here now on our hawk. Once again, markets, we don't have the signal yet, but everything is turned green. So we're looking to potentially be buyers here. At least from a scalping point of view. Working on a possible trend change signal higher here now on our Falcon. So here's the trend line change, here's the up, here comes the down. Now we need to come back with another up and a buy signal. Notice the conflict. The eagle, because it's looking at trend, is working on a possible sell signal. Our band dead neutral, but we're printing a red warning dot on a green bar. This is a green bar sell. This tends to be a fairly high probability signal. You see here's a green bar sell also. You see that had pretty decent follow through. Wow. So the hawk now working on a possible macro pullback signal, and the eagle still working on a sell signal. This market is jammed up. Okay, so here comes our trend change signal. We've got the warning dot. The hawk macro pullback is already underway. So that would have been something like that. But we'll see whether we get a trend change signal complete now on the Falcon. Okay, so I've got a warning dot, I've got another warning dot. I can anticipate that it's going to print somewhere around here. Can I cover the trade below the low? Yes, I can. Hey, everybody went home. We were working on a trend change signal. We're still working on it, but nothing else. Like Jim says, it's odd the mini Dow made a new low of the day, but everything else not even close. Well, you guys, unless anybody has any questions, I think we're going to button up the room for today. Yeah, just an odd kind of day today. If you are going to trade this afternoon, you know, I'm almost thinking the best thing to do is just bracket the range. You know that? Just identify the range. Here it is. It gets to the upside, buy it. It manages to get to through the bottom, sell it. Right now, they just seem pretty happy to go sideways. The eagle giving us a sell signal, but not until the ATR flips over. So it looks like we're going to be sellers somewhere around 46.19 if, in fact, the market continues lower. Crude oil, very quiet now after the inventory release. Soybeans looking like they may want to head lower. We're working on a trend change signal here with soybeans. Nice thing about soybeans is once they settle on a direction, they tend to stick with it. So here's a possible nice little short in soybeans. So we have our trend change. Here's the down, here's the up, here's the down. Notice our trend line changed color. Oh, this is actually a late filter entry signal also. Tends to be a very high probability signal for the Falcon. The trend line does not change color. The filter does change color. So the filter goes out of sync, the trend line does not, then we generate a signal and everything comes back into sync again. That tends to be a pretty high probability signal. But here too, the market, it seems like all the trading came early, that first half hour or so, and nothing on the heels of it. Yeah, so James is asking about soybeans. So here's soybeans on the Falcon Swing Trader. And here's soybeans on the Hawk. So we're into yellow bars. We don't really have anything tradable on the scalper just yet, but we are getting a comparable or complementary sell signal here on the Eagle. So big move lower. Everything is in sync now. We've had a green bar sell, and this too is something that we could cover above the swing high, which is always nice when you're able to do that. All right, so there's soybeans for you. All right, you guys, thank you for your attendance today. Sorry it was kind of a jumbled mess today. I'll do better next time. Don't forget, if you want to get in on that support and resistance suite special that Adam said he's going to be offering, you can sign up for that at the Indicator Warehouse. And DTS owners, I will see you in the trading room again tomorrow morning. And everyone, I hope that you'll join us again at next week's open house. And I will talk to you then. Bye for now.